Welcome back to update number 16 of the Robinhood portfolio. If you are new here, I'm a long-term dividend investor, which means I buy and hold dividend-paying companies. Regardless of whether or not the market is selling off like it currently is, to me that just means I'm getting in at better pricing. So I have not done any sales since the last week and probably won't be unless a company completely suspends their dividend. Now, if you are a new investor or new to the channel, I would consider joining our Discord. We have about 12 or so members in there, but it's a good place to talk about stocks and whatnot, other kinds of things, and completely free. So consider joining that. Once we hit 50 members, we're doing a $50 gift card giveaway. Now back to the portfolio here. Obviously we've been selling off. I would say most of it's due to the virus and everything opening, some stuff closing back down. There's a lot of uncertainty right now, so when that happens, people like to pull out of investments because there's fear, and that doesn't change my strategy at all. I'm super confident in these companies to pull through all of this. Most of these companies have been around for a long time, and even if they did do a small dividend cut or even suspended the dividend, I would be pretty confident that they would start paying again. So obviously I will take that on a case-by-case scenario, but just so you guys know, my strategy is not changing. So this week we bought into 3M. I put a full $125 in them utilizing fractional shares. Got about 80% of a share. Average cost is $152.41. Now we'll talk about 3M more once we get to Simply Safe dividends. Now, speaking of dividends, we did not get any since I last talked to you guys, but for anybody that is new, I like to track everything here. This is mostly what I focus on. I do not focus too much on the daily, weekly capital gains losses. It's something I pay attention to, don't get me wrong, but overall, this is the focus of the portfolio. I want to see my actual dividends I get paid go up week after week, month after month. Now, heading over to the dividend tracker, Simply Safe. For anybody that is new, again, this is a platform that I use to track my dividends. They also give safety scores on different companies, which is kind of a helpful tool. If you're curious about it, they have a 14-day free trial. Now, for anybody that has been sticking around, I have to apologize. Last week I had my full portfolio pulled up instead of the Robinhood portfolio on the weekly update, so the numbers are a little bit different than what I was saying in that video, but basically it is 179 income now, and negative 4.6 is the correct number with 3M added in. Now going back to 3M, safety score is 75. Their dividend growth is only 2%, but their yield is almost 4%. So we've already added $5 of income to the portfolio just by picking that not even full share up. Now, as far as diversification, really heading in the right direction. I do need to figure out exactly where I want to be for real estate, but I know we're close. I want it to be a pretty big section just because of the income that it offers. And when you have companies like Realty Income that are so dedicated to paying their dividend, it's just not a bad idea for the sake of my income-driven portfolio. Now, as far as safety, again, we are heading in the right direction. A lot of it is unrated, and that'll even grow once we add in the bonds, but that's totally okay. I'm gonna be probably making a pie on my own, like I said, so we can more accurately see how diversified we actually are. As far as dividend yield, I do expect that to keep going down. I think 4% is probably where this portfolio should be, especially when you add in Johnson & Johnson, which have a pretty low yield, but we'll see how everything pans out. I'm not going to really target that to a certain number as much, but this one I do want to get to 2 to 3%. That's kind of the whole point of dividend growth investing. But yeah, that's pretty much it for the week. I just want to point out for all investors, this is another prime example of a time where you got to take a step back and just reevaluate. Make sure your strategy is what you want it to be and stick to it. If you're a dividend investor like me, just make sure the companies that you're investing in are going to pull through this. There's already been a cut recently for my portfolio. It was on SPHD. We talked about it on Instagram. If you're curious about how much they did, just go check that out there. But basically they just did a 1% cut of the dividend. Not really a big deal. I don't have that much invested in them anyways, but I'm going to keep investing in them, and all these other companies, even if the market goes all the way back down to here, it's really not going to change my strategy. And the reason is I'm really confident that pretty much all these companies are going to keep paying their dividends, and even if they didn't, they would probably get right back to it as soon as they financially could do that. So I'm not worried at all. I know there's a lot of fear in the market right now again, but it's just the natural cycle of things. The fact that we recovered as fast as we did, again, I kind of think it was unrealistic to expect that to keep going. So that's just my opinion. I'm gonna stop rambling. Thank you guys for watching. If you made it this far, please sub to the channel so you can get these weekly updates, see how this portfolio does. And then tomorrow I will see you guys with the M1 monthly only dividend stock portfolio.